So we are live on YouTube right now. Welcome to live interactions with global change makers. Today we have with us a very special guest who has been in the industry of investments and financial sector for more than 3 decades. He has been a pioneer in terms of taking the torch of responsible investment in the Indian industry, and has been heading SBI Mutual Fund, which is one of the largest and the first mover in the space of ESG investments. We have with us Mr. Srinivas Jain, Chief of Strategy, Digital and Technology for SBI Mutual Fund, talking on sustainable economy. Welcome, sir.
Thank you very much, Harsha. Thank you for those kind words. Happy to be doing this.
So you have been an investment professional for close to 3 decades and have seen the shifting and building of Indian economy since we opened up to the international community in the 90s. What has been your journey?
Yeah, it's interesting you should ask. I was more, I would say, an accidentally moved into this professional. I had no idea I'm going to get into capital markets. Yeah, I was doing my CA. The firm that I was doing my CA, I also ran a broking business. And I just got interested. In fact, I left my CA in between and joined this firm. And they had an opening, thankfully, at that point of time. It was a broking business. And I just got hooked into it. And over the years, developed the expertise to understand investment management, how it works. Was involved in multiple, businesses, whether it was broking, advisory, and now asset management as part of the initiative. I've worked with a small broking firm as I started my career, moved on to work with Kotak Securities, handling customers, large customers, clients, went back to broking again when ILFS started their InvestSmart business in broking. I was one of the first employees to start their broking side of the business. And then, of course, came to asset management. Now, asset management is about 24 years in asset management, I would say, the total experience. So, and this is a little more long-termish kind of business. With SBI now, I will be completing 20 years, as doing various roles. And of course, the current role is to drive strategy, and one of them is our ability to be more sustainable investment company in India. Yeah. So if you were to ask me, what have I seen? I think in the last close to 3 decades, I would say, as we grew up, we were not as confident as today millennials are, or post-millennials, or whatever that, Gen Z, or whatever you want to call that. Today, I think there is truly a more confident, and like the government says, Atmanirbhar Bharat. Today that I think is much more a reality. But years ago, it was different. The economy was hand to mouth. People had ambitions were limited. And today, I think people can really dream and dream big. And while they dream big, they're also more confident. And one of the new trends that we see is obviously they want to do this all very in a more sustainable way. Hopefully, we'll talk more about that in the course of our interaction.
Sir, how do you see the Indian economy evolving, especially during the post-COVID times?
Yeah, it's interesting. I think, as we started a year ago in March, around the same time, it was all initial gloom and doom. Nobody had an idea what is it going to happen, how bad was the, economic impact, and all kinds of numbers were thrown around. And market did react, and all of us knew how the market reacted in the month of March, April. But I think the initial response by the government, though very skeptical in the initial days, was actually kind of helped shape the way things come. And like anything else, Indian economy is, it's in those animal instinct levels. No, once you've seen what is possible, and the bounce back was unreal actually. The post Diwali kind of economic, activity improvement was even for the best of positive thinkers was a big revelation. And then we've slowly started rebuilding the economy, and it's a very large part of what's actually happening today. And to aid that, I think we had a very revolutionary budget. People may say whatever on it, but I think a lot of stuff that came out of the budget, and if implemented well, will just definitely change the way the Indian economy and the capital markets will get shaped. So I guess we've evolved reasonably strong. Of course, nobody wished we went through this, but now that we've gone through this, I think the future is definitely very bright. A whole lot needs to be done for sure, but I think future is definitely very, very bright for the Indian economy. And you see that in the way the markets have reacted.
Thank you, sir. Totally agree with you. So, SBI Mutual Fund has been the first company to initiate ESG-based investing in India, and among the leaders for responsible investments in India. How do you see its importance shaping the emerging as well as the developed economies across the globe?
Yeah, thank you for that. Actually, SBI Mutual Fund was among the first in Indian markets to adopt this pioneering in this space, right? We should say we are like one of the first people to get into it. For us, it was like adopting more on integrated thinking in the responsible investing kind of space as we started thinking about it. Actually, the world has many corporate failure, bad governances. Yeah. All of this actually triggered large asset managers like us to start looking at it. The post-Satyam kind of the world, the importance of ESG, especially the G part of it in India, became very, very important. We set up our ESG kind of investment processes way back in 2011. Was in 2011, G became a important aspect of how we started looking at investing. And the negative screening was one of the first way to do it, right? Putting a governance score on how we manage stuff was the first thing that we did. We then started looking at the ecosystem. Now, of course, the ecosystem has evolved quite a lot. We've been able to make an impact on responsible investing, not just as investors, but in India, but globally too. We now have we are part of many of the global frameworks like UNPRI, regulations. We're part of the Climate Action 100 Plus, Asia Advisory Group. In fact, we've done so well that the ICGN Global Stewardship Championship Award, which was at a global scale, was given to us last year, which is a peak of our proud moment when an Indian entity, an asset manager, gets recognized at a level of a global scale. And this is a big, I would say, wetting of our capability in this space, or at least it actually pushes us to do more, because in the very, very early days of our ESG growth plan or ESG plans, we have been, recognized by global entities saying that we are on the right scope, right track, and we can do more. So one of the things that we've seen and your question was, how was it different from developed markets to, advanced markets to Indian markets? I think one of the things that we've seen in the developed economy, more so like Europe and others, they're actually much, much advanced when it comes to responsible investing ecosstructure, right? Whereas in the emerging market, it's very, very recent. So we've seen flows into ESG funds from FIIs, in the last few years, I would say. In fact, even the domestic investors have also started looking at ESG space. We see a significant shift where the capital have been moving from so-called traditional investing to more responsible investing vehicle. I think this is very desirable, and more than desirable, this is necessary, because as emerging markets like India, we will have to overhaul our economy. And if they have to be met with big goals like net zero emission or SDG and other sustainable and equitable goals for the future, we need capital. And to attract capital, we actually need to do more on this particular space. Spaces in energy, infrastructure, alternate energy sources. There's a lot that can be done. And I think that's where the difference is. Recognition of ESG in India is in the early stage, and I'm sure a lot more will happen in coming days. I think the principle in India about sustainable future or sustainable investing becoming key part of, I would say, investment is something that we would look forward for. But our joint venture, Amundi, which is a global leader in ESG, actually has done their entire investment, in the last, I think, 3.5 years now. They've moved from having ESG products to be ESG being on top of everything that they do, right? I think that's kind of the goal we also have as an asset manager to move. And we believe that's going to happen as we start, doing more. And more importantly, we are a derivative of what our investor wants. And if our investors ask for it, and of course, we will shape that discussion, we will encourage that by offering products. But the more people are interested in products like this, the more people actually encourage us to do this, the more you will see us doing it. So that's, I think, is where the real difference between the more advanced markets in India is. We are still at a stage where we are evolving and there's a lot more to do, but the pace of change is significant. I think in the last couple of years, the number of ESG funds that have been launched in India, the whole topic about sustainability being discussed at every level, whether it's government, regulator, companies, and asset owners or asset managers, is significantly gone up. But that's still in a very, very early days compared to the way it's in global markets.
Totally agree with you, sir. Now, although ESG, as you mentioned, is becoming a norm for any possible investments, the frameworks are speculative and normalization is subjective to investors' requirements. How can we achieve standardization in the system?
It's a good question, Harsha. Standardization of ESG-based definition has been a subject of scrutiny for a very long time. There have been regulatory bodies that have partially defined something called what is green when it comes to context of green bond. There are a lot of discussion. At least in India, there is really no a single definition around it. That's why at SBI mutual funds, we've started working with multiple stakeholders and trying to, evolve this discussion around the standard framework. Right now, we work with, we are very important partner in India-UK Sustainable Finance Forum, where we are active, we're working actively with them to bring and at least get some of those global standards to India. We are also working with the Green Finance Leadership Consortium, right? So that also helps us to bring up some of those best practices to India, apart from all the work that we are doing on CA 100 plus and the Asian desk on that. Both of these deliberations, on basically on sustainability and what is called as a green taxonomy for India, these are the roadmap for sustainable finance. And one of the new things, obviously, the BRSR framework that the SEBI MCA is now pushing. I think once that framework starts becoming, a lot more clarity will emerge on the data standardization. Today, the data standardization is a bigger issue. So in the interim, I think we expect investors would largely continue to have their own ideas, frameworks like we have developed. And these frameworks and ideas will also grow around the ESG space. Actually, it's good that it's pointing in the right direction. And given the importance of non-financial data today and long-term sustainability of investments, I think these are all very positive signs. And of course, the answer to you is that there is no standard yet. And I'm assuming the standards will come in coming days.
Wonderful. So we really hope that that happens soon. Though we still don't know who could be the possible authority for the same.
So I think, like everything else in the world, this would come from various spaces. And as best practices gets laid out, the best practices would turn into regulations. And once the best practices turn into regulations, the regulation also evolve, right? I mean, as more feedback starts coming from the market players, social network, I would say the social, sector out there, that's what will frame the regulation. And like everything else, it's going to evolve. Today, when you look at some of the advanced economy, the way the whole framework has evolved, and today where we look at India, where the framework is still yet to be put in place, there is a long way to go. To start with, I think we can be very much inspired by what's happening in the global markets. And since it's very small and very few players like us are actually part of this ecosystem, somewhere there is a responsibility for players like us also to be involved in shaping that.
I totally agree with you, and hope that
But
happens.
I would actually, we did some, very interesting work on this. I am expecting more work to happen from the government side in coming days, and you will see some, big, at least to start with, data standardization is something that's going to come up very soon.
Sir, may I ask you, the investee companies wherein ESG based investments are made, or have you seen profits there? And what are the benefits of responsible investments for the shareholders, investors, and individual consumers like us?
Yeah, actually, good question. I mean, why would somebody run a business if there is no benefit for the ecosystem or for the investor as a whole? So we've initially built the thesis that what is good for the country or the economy is good for everyone, right? So what's good for humanity is good for everyone. So that was a thesis. But over the years, we've got positively surprised because these correlations started coming out very well. In the initial years, there was very little data for to try the correlation. So we actually converted one of our oldest fund, SBI, Magnum Equity Fund, into an ESG fund way back in 2018. And we were very positively surprised by the amount of interest people have shown for this strategy. So there are two parts to it. One is, are people interested in ESG? Second, is it making sense in terms of eventual returns to the investors, right? And third, is it seen as something that can make a difference and impact to the economy as a whole? So we've seen all of that happening. In fact, it's very early days, right? So if you see, basically, ESG indices have actually outbeaten the benchmark, right? Globally and not just in India. Closer home, I think Nifty ESG has outperformed the benchmark. MSCI India Leaders Fund index has also outperformed the benchmark. So we've seen some really positive, traction. And again, there are periods when ESGs have not done well, and there are periods that ESG done well. But overall, there is a good traction around it. And to be fair, just putting in the lens of just the return is not a great way to look at this structure. In fact, just around as the COVID started, we did a little bit of study in-house because we have now invested significantly into that. In that, we did I think the observation period was Jain to May because we were able to cover pre and post-COVID kind of a data. So we saw something very interesting. We saw that companies with company which had higher ESG scores actually did very well during this period. Of course, the data period was very low. Similarly, even sectors which had, in fact, the average stock fell by ESG laggards fell more 20% more than the regular ESG compliant kind or ESG positive stocks, I would say. I mean, I don't know the right nomenclature. I would say the ESG positive stocks did better than ESG laggards by almost 20%. And when you look at ESG sectors also, because sectors also define, there the difference was pretty staggering, almost 38-40% fall in low ESG index sectors compared to a positive correlation, positive ESG sector. So, of course, the data is very limited. A lot needs to be done, but it gave us that impetus that I think investing in ESG compliant companies is not just positive from a point of view of the impact itself, but also from an investor portfolio. There is a lot that can be done. Also, the largest investor in mutual fund industry today are going to come from the millennial space, and millennials are going to go forward, make those investments. And you are one of them, and many millennials out there are actually have this whole aspect of what are the value add that they can add to the society, environment. And there are a lot of interesting questions some of our young investors are asking, saying, are you doing the right thing? Are your finances going to the right product? I think so. ESG-based investment will become more demand-driven in coming days. rather than performance driven, right? And I think that I see that happening. People will definitely look at long term. Obviously, nobody will make money to lose money. Nobody will invest money to lose money. But that impact will also come from the positive value for the environment and community. And as our investor starts asking for it, I think that's going to happen. So I think, there are 2-3 aspects that I talked about. First aspect is obviously there is clearly some correlation between high quality ESG compliant companies versus and the stock price or the performance of stock during bad period. Second, there is this whole thing about demand. I think people, especially young investors, are keen on investing in less polluting, more impactful company. And third, the money that is going to these companies are doing well. Our engagement with these companies also, which are, let's say, low ESG score, have gone up. And thanks to that, the performance is also going up. I would say performance, when I say performance, is again very, I think when we look at it, very cliched, but I think these companies have started doing very well on the ESG score too.
Thank you, sir. That's extremely encouraging for all of us. In the earlier answer, you mentioned that the government should take some steps to accelerate. So what, according to you, should the government or the industry take the necessary steps in order to accelerate the process of responsible investments in India?
Yeah, Harsha, the ecosystem around sustainable investing is actually evolving, right? However, the evolution has only picked up pace in the last couple of years. It's not like, to expect too much to happen overnight is very, there is a lot that the government needs to do. Today, we have seen more and more mutual funds and the investor side of it doing well, more ESG funds coming and getting picked up. Similarly, we have seen many corporations coming up with sustainable bonds, and therefore there is the investors' appetite for sustainable investing is also gone up, and I talked about it earlier. I think, like I mentioned earlier, standardization of green sustainable financing is a very important foundation and the government can help quite a lot. And I think Ministry of Finance is already working on Indian sustainable finance taxonomy. I think that's likely to be one of the first stuff that I guess will help. Actually, good policy framework is very important, right? We need regulations for both the investors as well as the investing companies, right? So one of the things that I see very positive is this stewardship code SEBI has come out with. And other regulators are also there pushing for. I think this push will help investors to adopt more responsible investing practices, right? So at least that's at a practice level, that's something that will happen. Also, at the same time, I think the regulations are pushing more towards disclosure requirements. I think whether it's emission control or things like even requiring women directors, strict health and safety rules that companies are being pushed to do. So from our experience, businesses react largely to the extent of regulations. So somewhere regulation is very important too, and nobody will do it just like that. Either there has to be a demand for it, or it's like the carrot and stick kind of a stuff. So either their customer should ask for it, or the regulator has to push for it. So I think most improvements beyond the law of the land are either driven by economic incentives or regulations, right? In between, I think out of the blue, nothing will happen here. I think the good news is both of that stuff are actually happening. There is government at one level trying to push for disclosures, better regulation, better taxonomy. And the other side, there is a demand-driven, push for this. So I think, and the last part obviously is there is some sense of responsibility for very large investors like us. Like SBI Mutual Fund is the largest fund house in the country. We have over 500,000 crores worth of assets that we manage. So we have some amount of responsibility on our side to kind of engage with corporates on their best business practices. So whether you call it ESG or not, it's somewhere down the line for us as a large investors, a responsibility for us also to do our bit, not just launch a product or manage something, or but also to change the environment. Apart from working around building better quality governance standards, it's also about going and talking to these companies, engaging with them. and we are doing our bit in that space too. So I think, in short, whether it's government, asset managers, asset owners, corporates, all of us have a role to play in accelerating the process of responsible investing. Yeah. I think one of the other things that I think we should also, think about is there also has to be an incentive framework, right? Today, there is the incentive frameworks are coming in many of these new, initiative. One incentive framework is the green bonds as a classic example of an incentive framework, right? So there are more such incentive frameworks that we probably need to build on, either through a policy initiative or through economic initiative. Either way, we'll have to build some kind of a framework. It's actually pretty surprising. We are just about 9 years away from our SDG goals, and still a lot needs to be done. And there is some concern. And there is a concern that if you don't fast track in the next few years, some of these large SDG goals out of the 17 goals, I don't know how many of them can actually be met if fast-paced incentivization doesn't actually happen. Another part, obviously, is is the eco structure, right? Today, as asset managers, I am doing it, and there are some millennials who are ready to invest in it. But there is this larger eco structure. One of the stuff that the capital market players also have to play a important role. For me, insurance companies have to bet big on this. Pension funds have to bet big on this, right? They have to build their investment policies, which will also impact ESG. It's not for just asset managers like us to think about it. So I think that is also a very important, aspect when it comes to, building a better framework for ESG, or at least, pushing the ESG framework.
So very well articulated for every single stakeholder. You've mentioned what each one of them needs to do. SBI Mutual Fund is presenting an initiative, SDG Card Innovation Contest. As you mentioned earlier, we are just 9 years away from achieving our SDG goals. What was your thought behind it? Do you all intend to start a SDG fund for the entrepreneurs out there?
Yeah. Anyway, at the risk of again repeating the same points that I repeated earlier, I think we were very early in our understanding of why this space is very important. Adoption of so-called integrated thinking in the space of responsible investing, and that's what we internally talk about. Currently, we follow more like a best practice in negative screening, and some amount of impact investing discussions. We are largely a public player, right? All our investments are in the public market space. We have an alternative investment avenue that's just opened up. We've got some Cat 3 funds, one or two Cat 2 funds. But the idea is not just to start off with, supporting these companies through a capital or through, investing in this company, but actually to promote these companies, showcase them as future leaders, right? I mean, these companies would grow into become public listed companies, which will attract capital. These companies will get attracted capital by private, money that can come through equity fund, private capital, or any other capital that can come there. So I think our idea is to first and foremost showcase these companies, their capabilities, right? By supporting something like this, we believe that will speed up the eco structure. So this is kind of a bottom of the pyramid, right? These are companies who are already building businesses which have social impact, right? Which has, environmental impact or stuff like that. So you don't need large companies to start changing their plans, which is usually the public companies, which obviously you need them because they create a big impact. But if they start from the bottom, especially the ones which have, the SDG goal kind of companies which have been built around that SDG goal ideas, I think we will be doing, a good justice for the entire eco structure. So to start with, the idea is to, promote these entities, but over a period of time, also see if there is ability for us to bring capital to them.
Thank you so much, sir. On this note, I would like to acknowledge our fellow panelists, Dr. K.K. Upadhyay, Mr. Ramesh Daswani, Vijay Kamble, Annie Vinod, and Nishta Kapoor, and others whom joined in. I request if they have any questions, they could come forward.
Thank you, Harsha. Mr. Srinivas, I want to know one thing from you. We are in development sector for about now almost 4 decades. And we have been always talking about promoting NGOs, the trusts or the foundations. But of late, especially during last 3-4 years, we always talk about promoting a social enterprise. And lot of venture capitalists also, like I know about Ashirvad. They give money for social enterprise, but in a business mode, where we take care of ESG and others. And of late also, last year in the finance minister's statement, she talked about social stock exchange. So I would like to know from you how you link ESG to the development sector.
No, but everything that I talked about is around that, except that from our space, we being a large public investment capability, we've built all our capability around public investment. So we will obviously support initiatives of a public company to start with, because that's the mandate we have. But I guess a lot that's happening on the impact investing side, right? And I agree with you. People look at it from a business angle rather than from an impact angle. And I believe that a platform like the SDG card platform that we are now talking about would help showcase these high quality companies to both potential investors and the ecosystem itself on what is doable, right? And many people can take this initiative. And I guess the NGOs and others who are part of this initiative will surely benefit from getting better exposure to this sector per se. So I don't have a plan around as a company how we can do that, but I guess there is a lot through exposure and events like this that we can promote this initiative.
Very nice, thank you.
Thank you, Dr. Upadhyay. May I request Mr. Ramesh Daswani to please come forth and ask his question? Sir, could you also switch on your camera?
Thank you, Harsha. Mr. Jain, my name is Ramesh Daswani. I've been very fortunate that my trust has been one of the beneficiaries of SBI Mutual Fund. Your CSR has been gracious enough to support some of our ventures. And I must say that the experience has been very, very fruitful and very, very smooth and nice to talk about. Having said that, sir, with your strategies and with your digital advancement and the kind of work that you are doing in the mutual fund sector, how deeply could we use your strategies and to use your technology to fill in the gaps in the NGO sector or the so-called economically deprived sector? As Mr. Upadhyay was saying, challenges are there. Last 4 to 5 years, things have changed, not for the good, but for the worst, in terms of the people or the development sector who are doing so much good or adding so much good to the value system. Right? So with your experience, with your deep pockets, with your deep resources, where do you think we could take this arrangement to another level, which would be mutually beneficial to both the stakeholders?
Yeah, thank you, Mr. Daswani, for those kind words. And I'm happy that you are a beneficiary of our very small contribution that we do on CSR. Mind you, we are a small company and we do our best in trying to pick good causes and promote them. Specific to the question that you have in mind on how can we use our capabilities, or at least the ones that we have. But the point here is, I think engagement is one way, maybe to engage with you more beyond bringing social funds, but bringing, our capabilities and expertise is one. Obviously, I need to sit with you, or my team needs to sit with you and understand a little more better on where we can make those impact. But I think there are 2-3 places where I think what can make a difference is collaborative funding, right? One of the ways to think about it is to see how do we connect our network to you that you can benefit from. Once we understand that this is a good cause that we can all support, we can definitely think about bringing in either our capabilities to help you run more efficiently, or the capabilities of our ecosystem that can help you, run more efficiently. You touched a little bit about digital. I honestly don't know exactly how we can help you on that, but I'm very happy to further engage and understand if there is something that we can definitely do to help your initiative. We are all ears. We are here to help initiative, but we have limitations. We are, we like everything else. This is a resource-heavy requirement, right? Time, space. So once we pick 1 or 2 good initiatives, we will go all out and make that initiative full successful. Right. So, and I'm happy if you have already made investments or at least supported your initiative. We think we should be able to also do more in our engagement and helping you out on that other space.
Sorry, just to add on to what I said, it was not only from a personal perspective. I was looking at more from the industry or for the sectoral difference at all. I mean, there are gaps which we all face. All the 25 or 50 or 80 good NGOs have the same problems in terms of digitization, in terms of outreach, in terms of fund management, in terms of sustainability. Today, we're talking about sustainable goals. But for us to sustain an NGO itself for the next 3 years or 5 years is going to be a challenge. A goal, sustainable goal, the global, the dur ki baat ho gayi. We are talking about sustaining our own existence, you see.
So again, the way I look at it is that, Mr. Daswani, is that I think there are 2 components of it. One component is, of financial capabilities, what we can do in terms of supporting it, initiative. 2 is our capability to bring both advisory skills that can help your, NGO scale, and largely to connect you with the right set of ecosystem players who can make that happen for you. And that's probably the best at the current level we can think about, right? With both sharing resources and sharing our network, our capabilities and understanding there. Beyond that, advocacy part is something that we are not very good at because that requires a lot of, research understanding. While we do have a team which looks at the CSR and the space around the CSR and the CSR that we support, we do in-depth research. I'm not really sure whether we can do anything beyond that, rather than connecting you with the right people wherever you feel there is some, effort that needs to be put, right? So, but once we think we can do something, we'll be very happy to engage and do more on that.
Thank you very much. I'll get your connects and I'll catch you offline. Thank you, sir.
My pleasure.
Thank you, Asha.
Thank you, Mr. Daswani, for the question, and I appreciate Mr. Jain for answering all of them. I have one last question from Annie Vinod. What would be the approx breakup in percentage in terms of consideration for each factor of E, S, and G? Is governance the most dominant factor? And is there a substantial difference in return from ESG focused portfolio as opposed to profit prioritized portfolio?
Yeah, good question. We touched upon it when we spoke about why there is really no standardization in the whole ESG norm. Wish everything was equated, but it's not. E and S and G have different impacts in the portfolio. It led with G for a very long period of time. G was the only way to make the ESG impact felt. E is becoming a big reality with the kind of companies that now we've started working on. At least the non-financial data that's coming out of on that is making a big impact. And S is now even more important. And in fact, I am really surprised why we don't have, equal opportunity fund or things like that in India yet, which is there in US and other markets. And I'm assuming that's the transition that we will see in the next few years. So the S part also will start playing in US. I see there are capabilities of, there are funds for Black women specific capital funding because they are economically and socially backward when it comes to accessing capital, right? So there are such initiatives happening globally. I'm assuming those things also will come in India in a matter of time. But from the limited point of view of the space in which we work, which is in the public markets area, there is very little today on the S space we are doing. We're, of course, working with the boards of these companies to promote gender equality, women ownership, things like that, which are very, very important and crucial for the companies. But beyond that, I think once this thing opens up and more and more people start asking for it, there could be more product ideas around the S part of it. E and G, I think, is a very large part of what we do today, right? And G obviously is the largest part of what we do today. And E is evolving to be the second biggest part of what we do today. I'm assuming with the amount of noise around E, or what noise is the wrong word, the encouragement around E that's happening post Paris, agreement, I think E will now very soon take over a very important part of ESG contribution. So I don't unfortunately have for any clear breakup of what percentages this is going to evolve, but it's largely G. I think she had a second question. I missed. Did I miss the second question, or was that the only question? Sorry, Harsha, you're muted.
Yes, so she does has one more question. Annie, would you be able to ask?
No. Maybe the same question. I probably missed the flow, but she had, I think, two components of the question. I hope I've answered both.
Yes, sir. I have one last question now. What kind of project has been running in field which is connected with financial literacy for the community?
It's a good question. Well, there's lots that's happening, right? So it's today a little more, I would say, unorganized. I know players like IS, CSR, and others are really working hard to bring discussion around and seminars and conferences around this. We also do a lot about education around it. To be fair, there is not much. I wish there was more, but there is a lot that's happening at a very small scale, right? I guess those initiatives needs to be to pick up steam, and hopefully you will see more of that in coming days. I mean, I am very interested to for more people to talk more about governance and proxy voting frameworks or best practices around it, more discussions around it, climate-related financial disclosures, science-based target setting, things like that. I basically want more of these things to happen. Just transition is something that we are working on. Diverse workforce-based discussions need to happen because there are really no standard practices around that, right? Things like that, I think we will encourage NGOs and other entities to do more, and we would encourage to public good companies to come up and talk about it.
Thank you. That question was from Mr. Vijay Kamble from RCCPL. Thank you, sir, for the question. Thank you, Annie. On this note, I would like to firstly thank Mr. Jain for addressing all the questions of us and all the panelists over here. And thank you to all the panelists, Dr. Upadhyay, Mr. Daswani, Mr. Kamble, Miss Annie, and other people who are present in this session. Any final words of wisdom, sir, message to all of us, to our institution? We are dedicated to research development of sustainable and responsible business leadership. What kind of courses should be run? And maybe a message to all of us.
Yeah, thank you, Harsha. I think you're doing an excellent job, and your team is doing an excellent job at IICSR. As I talked about, I think some of the courses that you already run are really good and best in class out there. And I wish more of the people practicing ESG players and the ecostructures adopt some of the good programs that you already have created. I think there are scope for you to look at more courses. I talked sometime about just transition, workforce diversification, thematic kind of topics that you can take up in your initiative. But I think the large message to your viewers or people who are watching here are basically responsible investing is an interesting space, and it's evolving very fast in India. And as a country and as an active investor, we should believe that the future lies in the hands, and the future needs funding. So sustainable finance is the one way to look forward. It's important that we create a cleaner future, greener future for our future generations. This message has been talked about by everybody, but I think we have to walk the talk. And as large asset managers, we feel there is some responsibility for us to work on that. One of the big topics is women in India have not largely assumed the role on the financial decision making. And as that ecostructure goes up, we believe a whole lot will change, right? I mean, this is the S part of it is very, it's not at a policy level. There is a more diversified output that will start coming as more people get educated about this. And again, I keep saying this. I mean, there is something that we have to do as large asset managers. We have to take responsibility, play the role of the catalyst to drive the development of sustainable finance ecosystem in the country. And we wish to embark this journey with all stakeholders, people like you, people like other NGOs who are thinkers here, companies, government, regulators, and of course, our investors.
Thank you so much, sir. May I request all of you all to please switch on your cameras and we can have a group picture with sir.
This is a good idea to take a group picture on a Zoom call. It's nice.
Thank you, everybody, for joining us. Thank you.
Thank you, Harsha. Thank you, everyone. Bye-bye.